Good afternoon, my name is David Walston, and I'm doing a financial news special today, separate from my normal Wednesday news show, to cover a recently released guidance from the IRS on the SALT tax deduction. So for those who are not aware, the new tax law limited SALT, or state and local income tax, deduction to $10,000. Until now, many states with high income taxes were trying desperately to find a way around the cap. But with the IRS guidance, many of those schemes may now be invalid. Here's a quick overview of what the IRS has said in the past and what the states were trying to do. First, back in the spring, the IRS made a warning to the states which stated, the proposed regulations, referring to the new tax law, will make clear that the requirements for the Internal Revenue Code, informed by substance over form principle, govern the federal income tax treatment of such transfers, referring to the SALT transfers that they were trying to set up. So what were the states trying to do? In some form or another, states with high income taxes were trying to set up nonprofits and trusts where taxpayers can make local and state income tax payments to the nonprofit organizations instead of to the state. And this way, they're hoping to classify the transactions as charitable contributions instead of SALT payments, or state and local tax income payments, and therefore there wasn't any cap on charitable contributions. So for example, someone in a high tax state, if they paid $20,000 in local income taxes, they'd only be able to claim $10,000 on their tax return, where they're hoping by this scheme they would be able to claim $10,000 as a state and local income tax payment, and then donate the other $10,000 to one of these charitable nonprofit organizations or trusts set up by the states. And so what the IRS said in the previous statement back in the spring was there's this thing called substance over form, and in these types of transactions, what matters isn't who you give the money to, but the reason for it. And so by giving money to a charitable organization so that you could get out of paying income tax is the same as paying local income tax. That seemed like what they were saying in that guidance earlier. But now that they've actually come out with their guidance, here's what it actually says. Instead of relying on the substance over form principle, they decided to look at it from the charitable gift angle. And if you're unaware, when you make a charitable donation, if you receive anything back from the charitable organization to you, that has to reduce your donation. For example, if you donated $100 and they gave you a gift tote back worth $50, then you could only deduct $50 worth of charitable donation on your tax return, not the full $100. And so what this does for the states who set up these organizations to collect state and local income tax instead of the state, so that people could get charitable donation credit, is if you donated $20,000 to one of these organizations, and then you got a credit for $20,000 from the state for your state and local income tax, then you could effectively you could get $0 of charitable donations that way, because both the 20,000s knock each other out. On the other hand, if you donated $20,000 and then the state only gave you an $18,000 tax credit, then you could write off $2,000, but that's not really terribly helpful either. So it doesn't really solve the problem. And so what this means is you get really little to no benefit from these trusts or nonprofits that these states set up. But one good thing to note about it is this guidance is effective August 27th. So any of these donations that were made before that may or may not be okay. They still might not work, but you don't fall under the specific guidance. So that wraps up my news special for today. If you enjoyed the video, like it and subscribe, and let me know in the comments below what your thoughts are. And visit our website and check out our social media, Twitter and everything, for more information about different tax laws changes and everything. And then I'll link in the description some articles about the change. Thanks again for watching.